All right, so welcome to today's session. As we started the previous week, we were talking about market structure, and I was explaining what algo structure is all about, or let's just say advanced market structure is all about. And I was explaining something like this. I was like, we have price does not just move up and down like this. You don't just see price going up and down like this. If price is going up and down like this, then everybody would be what? Would be making money. We might not even be making money, because when everybody is buying and there's nobody at the other side of the market, how would you be getting money? How would you be able to make money? So we don't actually trade like this. This is actually the basic form of market structure that we understand, but we know that market evolves. We have different concepts and all out there. So now, I said the other day that I'll be sharing 3 different types of algo structure with you, or advanced market structure. And that other day, I explained that the algo structure is all about the concept of what? Liquidity, right? Now, when we are talking about the algo structure, just a little revision, we have something like this. Initially, people will be like, this is higher low, higher high, higher low, higher high, right? But now, when it comes to algo structure, we have something like this. Yeah, something like this. Now, the people that don't understand algo structure will be like, this is what? Higher low, higher high, higher low, higher high. But now, when it comes to advanced market structure that entails the concept of liquidity, we see all this move as just a swing move. We have this down point as what? Higher low, and the upper part as what? Higher high. Then this point is what? A trap. And I can still remember vividly the other day, I said you can label it as what? A, B, and C. And point C is always what? A trap, or and what? Inducement. That price would always what? Take out before what? Continuing. Now, I also said everybody will be looking towards to buy from this point. Your other block traders, whatever traders, your trend line traders will have their trend line like this. Yeah, and everybody will be looking towards to buy at this point. But since they don't understand this advanced market structure, price will just come and what? Take all of them out and what? Continue its movement, something like this. So I'll be showing 3 examples today of this advanced market structure. Now, the scenario 1, or the first example, this is how it is. It's just the basic, or the first definition of advanced market structure I gave you, or the example that's like this. Price goes to the upside, and we have a leg here. Price moves to the upside. Now, when you have something like this, price forms something like this, you should always know that price is coming to always what? Take out this point before continue its movement. So now, below this, if you have any entry point like your order block, your demand or supply, support zones, whatever, you can comfortably what? Buy from there, because you know that, yeah, price has already taken out the form of inducement that is here. Now, then you just see price come into it and what? Push to the upside, something like this. Now, same scenario applies for what? For a downtrend. This is what you have. So quickly, let me show you example on the charts how it happens. I'll point out the points A, B, C for you to see before I move to the second scenario, right? So let me spot out one for you. Okay. Let's see this. Now, talking about this particular pair, GBP USD, let's quickly use it and I show you how it occurs. Now point C is always what? An inducement. You can call point C and what? Inducement. Now when you come to this point, you see that okay, we have something of this nature. Look at this. This is what I said. Price starts from here, went to the upside, come down and push to the upside again. Now literally we can say this is our what? Point A, point B at this top. This other swing is called your point C. Then price push to the upside. Then all what you have to do is to what? Mark out this point I called your what? Your point C. Just do what? You literally just mark it out. And what? You have your entry below it using the other block or whatever you have below it. Then you pick it like this. Now see what happened. Price just literally came into it and what? Drifted to the upside. Very simple. Like this, you have your stop loss here. That's a win on its own. Now, for those that don't actually understand how it works, we literally know that all of them will be looking towards to buy at this point. Yeah, you see that price reacted from there. Price reacted from that point. Everybody that is buying here. For now, what happened? Let's say they are trying to buy from this point, right? And they are targeting this next point. Then see what happened. Price literally reversed to take out what? Their stop losses and they are what? Out of the market. But now see how this particular algo structure or this advanced structure give us precise entry at this what? At this downside. Very what? Simple. Very simple. And that is how it works. Now you can check out different examples. We still have different examples. I can still point some out for you, for each and every one of you. Look at this point here, this downtrend. We have literally price 1, 2, 3, 4, or you can say A, B, C, and D. What happened at this point? You have your point C marked out. You have your entry at this point from you pick the whole of these points, the order block or whatever there, and you have your short position. And what happened? See how price came into it precisely. You have something of this nature, and what you target the next low here, and you have a winning trade, and that is how scenario 1 works out, or how the scenario 1 plays. It's something very, very simple. You don't have to know how to check it out or practice more. Now, quickly, let's proceed on what we are trying to see. And that's for the first scenario. Now, for the second scenario, the way it occurs is something different from this first scenario that I showed you here, which is this, right? Now, for the second scenario, we actually have price creating something very fishy, whereby we have price doing something of this nature. For the second type of how it's usually formed, we have price doing something like this. Then we have a push to the upside. Yeah, we have something like this, and price pushed. Now, the way this one occurs is that you might not actually get an order block or anything below this. What you literally do is you enter on what? On the point C or on the inducement. Now, it's not that, literally you'll be looking towards to buy, let's say you'll be looking towards to buy on an order block or whatever that is at this point on top here like this. No, you'll not be buying on top. You'll be buying what? At the where that particular what? Where you are marking that point C on, or the weak or the low of that point. That is where you're buying from, or on that line. So immediately price takes out that point, it's what continues moving extreme or to the what? To the lowest point of interest you actually have at this point. Same thing applies for what? A downtrend. Now the way it happens, you have your entry on what? The inducement, and you have your stop loss on what? On the low of that what? That swing structure. Now look at the first one. You know that the first one is just that we have the point C and you pick an entry below, either with an order block or so. But now this second scenario does not present you with an order block always. So you enter on what? On the point of liquidity. And immediately price takes it out, it's pushed to the upside. Now let me show you a quick example. I pray I am able to get a very fine example on this particular pair. Yeah, I hope I do. I hope I do. I hope I do. Let me see. This is GBP. I don't know. What is GBP? I think everything here is just messy. Okay, let's use this pair. All right, now take a look at this particular pair, AUD USD, right? Now, when you are looking at AUD USD, what did I tell you? I'm like, when you have these points, look at this, the points A, B, and C. This is the last point. What you literally do is you place your entry on where? On the point C, something like this, right? And you have your what? You have your stop loss at what? This swing here, something of this nature. And the what? When you have your entry on these points, from here, then you have your what? You have your stop loss on this point, which is for the second scenario. And you don't have to target like a thief. You have your target on the next possible base zone. And look at it. After you got your target, you don't have any problems with what? Anything that is going on with it here. You already have your target. Anything that is happening at this point is not your concern. You've gotten your target and you've left the market. You don't need to FOMO and jump in there. Price is still pushing towards to the upside, and that is how it works. Now look at another scenario of this second point. Though this is looking like the scenario one. Yeah, this is even the first scenario I showed you. Look at it. Point A, B, C, and what D. What happened? Price came back to take that point out. After taking that point out, it's pushed to the downside. And that is just algo structure for you. It just points out more of what? More of liquidity, more concepts about liquidity. So quickly, let me point out the last scenario. The last scenario is something very, very technical. Yeah, it does not occur always on the charts, and when you actually see it, it looks more of the second scenario I talked about. Now, the last scenario, the way it actually happens is you literally have something like this. Let's say price is moving to the upside. Now, you know that the point A has been created, the B has been created. In normal scenarios, you have that the point C would be created and price will push to the upside. Then later in the future, price will come back and take out this point C and drop, right? But now for this point, scenario 3, or this third example of how the algo structure happens, it just happens this way. Price creating the A below. After creating the point B, it creates the C internally. Now, when the D is created, we have something like this. Now you see that price created A, B, C, and D internally. Now look at other scenarios. Price created A, B, C, and the D outwardly before coming down to take out this. But now for this third scenario, you literally have A, B, and C. The D is formed internally. Now before price moves, price will just take out the point C and push something of this nature. Now let me draw out the point C. This is what the point C. So it does not occur every time on the charts. It's just once in a while. So let me show you an example of that very quickly. Very fast, very fast. Now, another example This is an example of what scenario 2 I talked to you about. A, B, C, and D. See what happened. Price took out this C and what moved immediately. You can see that price did not come to what to this point immediately. Scenario 2 is more of like you catching a continuation. You catching what a continuation. Because at the long run, you can see that price still came back to this point. But immediately you can see that after price took out this point, see it's pushed towards the upside. So let me quickly look for this last scenario of this scenario 3 for you, so you'll be able to see it. We have something of that nature on USD card. I think we do. All right, now we have something of that nature here, but it did not play out perfectly. It did not play out perfectly, right? Now you can take this as what? Let me use this scenario. We have point A, point B, this is the C, and this is the D. After the D was formed, what happened? Price came into this point, taking out what? The C and what? Instead of price to continue to the upside, I think there was a fundamental also that pushed price downward. After price took out this point, it was supposed to push to the upside. Yeah, but the trade was actually invalidated. So these are just the three scenarios to this algo structure. But now for those that are just joining, I doubt if you'll be able to understand these things, because we already talked about uh the introduction to the algo structure. So probably if you want to get it, you have to go back to the first video on advanced market structure we talked about. So you'll be able to understand everything on this continuation of it. So I think this is where I'll be stopping for today. I don't know if anybody has any question.